Hello, everybody, and welcome. As we like to do every week, we like to take a look at the past week's market activity and then bounce around the market looking for something to trade. Well, if you've been watching the market at all over the last, let's say, month or two, I think this graph says it all. You can see it's been a wild ride, right? We took a huge dive here at the beginning of January, and then ever since then, it's also been a wild ride with huge ups, huge downs. The last couple weeks, it's kind of been on the downside. But what this means is the market is obviously volatile, right? And we generally like volatility. We're volatility-based traders. But me personally, when the market itself gets this volatile overall, I don't mind stocks getting volatile. Each stock can do its own thing. But when the market as a whole gets volatile, that means there's huge moves up and down in individual stocks can happen. You know, one or two stocks or a handful of stocks can make really big jumps up and down. So when the market as a whole gets volatile, I like to stay in ETFs, things like this, SPY, because if the market's volatile, you can only imagine that individual stocks can really go on a wild ride. So ETFs, if you're not aware of them, exchange traded funds, are basically a conglomeration. So SPY is an ETF for the S&P 500. There's 500 stocks lumped together into one stock called SPY. And the same thing holds true for QQQ, which would be the NASDAQ, IWM, which would be the Russell. So like I said, when the market gets extremely volatile, I tend to move into ETFs because overall they're going to be a lot safer. Obviously, 500 stocks as a whole are going to move a lot less than potentially one or two individual stocks. So in this case, again, like I'm staying in, like I said, the ETF world. So where am I going to go to? Well, because the market's been so volatile, everything's kind of been volatile, I'm going to go into the bond market. And you can see pretty clearly the bonds have been taking a beating over the last few months, and only in the last couple of days did they make a bit of a bump. But here's the part I want you to notice right here. Look, volatility is extremely high as it's been essentially in the last 6 months, right? Here's the volatility down here over the last 6 months. And you can see it shot up a bit kind of back in November, and we're right back near those highs again here now. But overall, you can see this is about as high as it's been over the last 6 months. So again, we like volatility. We want to stay in an ETF because it's not as volatile as an individual stock might be. So we're going to go into the bond world and we're going to do an iron condor there with the high volatility. So we go over to the trade page. Again, we're always looking to be as close to 45 days as possible. So we're going to go right here. It says 52. Tomorrow when this opens up, it'll obviously say 51. I've already set the trade up for us. We're just going to say the stock is roughly 138. It's kind of like a 138 in the middle. So what are we going to do? We're going to go $7 down on the put side, and we're going to go $8 up roughly on the call side. It's essentially as close to the middle as we can get, right? Because if this is 138.50, we're kind of right there in the middle. So we're going equidistant away, put in calls. At this point, it's about 7 up, 8 down. 7 down, 8 up. And so I'll put in a call. And then we're going to buy the call and the put that are $2 away from that to create a $2 wide iron condor. And we're looking to collect 66 cents or more. So what's going to happen? Tomorrow the market's going to open up. Let's say it's right here tomorrow. When it opens up, it doesn't budge. We're going to go $7 down, $8 up, sell the put and the call, then buy the put and the call $2 away to create the $2 wide iron condor, and look to collect 66 cents. If we can't collect 66 cents, then we start pulling sides in closer. Again, if we think there's a better chance it's going to go up from here, we're going to make the put side closer. We're going to bring the put side up. We'll make it to like 132 or 133. If we believe the stock is going to go down from here, the ETF, TLT, then we'll move the call side closer. We might take this down to 145 or 144. But we're going to start adjusting those strikes individually until we get to at least the 66 cents credit or more. And that is our trade in TLT for tomorrow. Hello everybody and welcome to what I believe is an exciting opportunity. Now many of you might be familiar with my classes up on Udemy, these 5 courses that I have on Udemy right now under the Option Trading for Rookies series. And my goal, if you follow along with what I'm teaching, is to really get you all up and trading as confidently and as quickly as possible, which is why I really believe this service I've created is the best way to get to the next level. Now if you go to sharpertrades.com and you go to the courses page, you'll see these alerts pop up. And the option basic trade alert right here sends out 2 to 3 trades per week in real time. These are trades I'm actually making at the time I'm making them. And on top of that, it'll send you the alerts when I close these trades for the maximum profit potential, best return on that trade. Now, normally it's $49 a month, but I want to reward all of you who want to take advantage of this because you're taking my course. I feel like it's in your best interest and mine to get you kind of up and going as cheaply and quickly and confidently as possible. So go to Sharper Trades, go to courses, look up this alert, and then what happens is if you type in this code right here, basic option FB1, so when you click on this alert, it'll take you to a page where you can type in this coupon code. And for you lucky few that want to take advantage of it, I'm going to give it away for $1 for the first month, because that's how important I think it is to get up and trading as quickly as possible, or at least see somebody trading to see how it works. Now, as I said, it's only $1 for the first month. If you stick with it, it'll go to $49 a month, but you can cancel anytime. So if you want to do it for a month just to see what it's all about, great. If you want to keep going, great. But again, this is to thank you for being such loyal and studious students, because like I said, at least for me, the best way to learn how to trade is to get up and trading with somebody that's trading in real time, which I am. So take advantage of this. Go to the Sharper Trades page, type in this coupon code, and go ahead and get this for only $1 for the first month and see what trading looks like in reality. And you'll get up and trading, I believe, quickly and confidently, much quicker than just trying to learn it through book smarts. So take care, and please continue on with this course. Thanks.